Trader James Wynn has faced another major setback on Hyperliquid, this time shorting the S&P 500 with 50x leverage. According to on-chain intelligence firm Arkham Intelligence, Wynn was partially liquidated on the trade and now has just $2,600 remaining in his account. He still holds a $184,000 short position that was opened around the 7,400 level. This is the latest in a pattern of punishing liquidations that have severely impacted his trading account. On April 6, 2026, Wynn suffered his sixth forced liquidation within 2 weeks on Hyperliquid. That particular wipeout drew widespread attention after Arkham Intelligence confirmed that his account had been reduced to just over $900, representing a loss of approximately $20 million on that trade alone. Wynn had outlined a multi-asset defensive strategy that included shorting both the S&P 500 and the Nasdaq, going long on WTI crude oil, and selectively buying BTC dips with spot capital. That bearish macro positioning has repeatedly been punished as markets moved against him. His total losses since May 2025 have reached approximately $98.5 million, with a single weekend accounting for an $80 million drawdown. On at least one occasion, he suffered 12 separate liquidations in a single day. The mechanics behind these losses are illustrative of the risks associated with extreme leverage. At 40x leverage, even a 2.5% price move against a position triggers forced closure, and most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. During a sustained rally, short positions at this leverage can be wiped out within hours of being opened. At 50x, the margin for error is even thinner. Hyperliquid has emerged as one of the most active decentralized perpetual futures platforms, and Wynn's repeated losses highlight the volatility and risk inherent in high-leverage trading environments. The risks of extreme leverage are well illustrated by Wynn's track record. At 40x leverage, even a 2.5% price move against a position triggers forced closure, and during a sustained rally, short positions at this leverage can be wiped out within hours of being opened. At 50x, the margin for error is even thinner. The implications of these repeated losses are significant, not only for Wynn personally, but also for the broader perception of high-risk trading strategies on decentralized platforms. The repeated nature of these liquidations suggests that Wynn's positioning has been consistently out of sync with market movements, and the use of such high leverage has amplified the consequences. The volatility of the markets he's targeting, particularly the S&P 500 and Nasdaq, has made his bearish outlook increasingly difficult to sustain, especially in an environment where macroeconomic conditions have shifted in unexpected ways. The use of spot capital to selectively buy dips in BTC adds another layer of complexity to his strategy, but it appears that his bearish bias has not been rewarded. The repeated liquidations also raise questions about the effectiveness of risk management in high-leverage trading environments. While some traders manage to succeed with aggressive strategies, Wynn's experience demonstrates the potential for catastrophic losses when market conditions move against a trader's position. The on-chain data from Arkham Intelligence provides a clear picture of the scale and frequency of these losses, offering a transparent view of how quickly capital can be eroded in such environments. The next signal to watch is whether Wynn will continue to trade with high leverage or if he will adjust his strategy in response to these repeated setbacks. Given the pattern of losses, it's possible that he may reduce his exposure or shift. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. His focus to a different set of assets. However, given the nature of his previous trades, it's also possible that he will continue to pursue aggressive positions, which could lead to further liquidations if market conditions remain unfavorable. The broader implications of this case are worth considering, as it highlights the risks associated with high-leverage trading and the importance of aligning one's strategy with prevailing market conditions. The repeated nature of Wynn's losses also underscores the potential for significant financial consequences when market movements are not anticipated correctly. As markets continue to evolve, the use of on-chain analytics platforms like Arkham Intelligence will become increasingly important in understanding the dynamics of high-risk trading strategies.